Good morning. Happy Bitcoin Flash Crash Day. I hope everyone's having a fantastic Wednesday. And I'm curious how many of you guys were actually there catching that insane candle wick downwards. That was like a 15-minute wick over the course of like 2 hours. Bitcoin does that consistently. I wish I could say that Bitcoin rarely ever does stuff like that, but truthfully, Bitcoin is a volatile asset that does that at least like every other month, it feels like. I'm trying to get rid of that blur on my forehead. It's the problem with being a little bit too pasty white, is that the computer thinks that I'm literally a green screen. Oh man, good morning Dream, good morning MK. How's it going, Humbled? Oh man, no, let's go. Good afternoon. I was catching Z's, not candles, that's fair enough. I woke up, checked the Discord, saw everyone was freaking out, went, looked at my portfolio and was like, damn, wait. Is it time to freak out? Is it time to actually freak out? But it was not time to freak out. We pretty much immediately came straight back up on this wick. However, we are continuing to bleed a little bit. So we had that candle go straight down, come right back up, almost close out completely a doji, and then we've had 2 more hours, although we just opened this one. So really only 1 hour of a candle that's continuing that pattern downward. So that might have been a quick little change in direction for Bitcoin there. We have to kind of watch carefully and see where it goes. If it continues to bleed and bleed and bleed, then we'll probably come and revisit this $41,600 area. If we find some level of support, I imagine we come back up to test that middle VWAP. It just depends on the strength of Bitcoin, right? I was looking all over the place to find what the hell caused this candle to happen, and I didn't really see anything. It was like the only thing on Crypto Panic that I saw was rumors that the ETF might get denied in January 10th. And I'm like, are you guys actually stupid? Like, is everyone in crypto just genuinely dumb? Or is there something that I missed? Is this like something that happened fundamentally? Or are you guys all just looking at one analyst? Not you guys, I know you guys have a higher IQ than this, but is the general crypto market just looking at a single analyst who's like, I think ETF might get denied, and then it crashes? Like, we haven't been talking about that for literally the last month, for probably like 6 months. Oh man. But okay, MK asked what kind of hair conditioner I use. I genuinely use only 2 products. Occasionally I'll introduce a third one to get these curls to shape the way that they do. It's conditioner. I squeeze out my hair out of the shower and then I load it with a bunch of leave-in conditioner. I use a silk cap at night to sleep in so that it doesn't fray my hair. And then occasionally I'll toss in some mousse. Occasionally. But really that's very seldom. So there you go. Some free alpha to start the day off with. I feel like my hair, now I'm just focusing on my hair. I want to see 38,000. How much RSC are you buying today? I was debating if I should add some more Vita, if I'm being honest. I was looking at the portfolio. All 3 of the main DeSci plays that I'm interested in right now are all down in the bottom quadrant of this portfolio. So I was like, I might need to scoop up another 10 Vita, you know? But I also don't have a ton of cash right now. I'm sitting on just 15.5% cash. And so I'm like, do I want to scoop up some more, or are we chilling? What are we chilling? Good. All right. Thank you, MK. Drop past my sell price, but the gas fees, ooh, yeah. Gas fees get decimated, my man. Especially right now when we see volatile wicks like this. When we see insane volatility like this, gas prices go bonkers. So you got to be very careful. That's why it's best to like take profits when no one's thinking about taking profits. Even though it might not be good in your stomach, you feel like, oh, Bitcoin just hit 45,000, like things are settled down a little bit. Why would I take profits right now? That's usually the best time to take profits. Like I'm excited that yesterday we took profits on some Saucer swap, because now I'm sitting pretty. I replenished $50 in my cash position, and I took some profits on Sauce before it dropped 6% right there, 53 bucks. So definitely excited with that. But I have an exciting live stream. I know we just rambled for a minute, but it's volatile as hell. And so we're probably going to look to see if there's any good open trades right now. Ooh, I did not mean to click the seconds. We want to go to minutes. There we go. But I have an exciting live stream because we're going to talk about something that nobody wants to actually hear, but you need to hear. All right. We're going to talk about the potential for a recession in 2024. 2024, 2025, everyone is so focused on it being hyper bullish, and I'm net long. Look I'm literally telling you, I only have 15.5% cash right now, meaning I am literally 86.4 or 0.32% long, all right? But we can't ignore the potential for a recession. We just can't, because there's so many factors screaming at us that we're about to go into a recession in the near future. And so we're going to address that. But first, let's go look and see if we get any good open trades. Heyo, what's good, FTW? Let's smash those likes today. Yes, if you enjoy this kind of content, if you enjoy making money in crypto, please hit that like button. The portfolio is a representation of how well we are doing in crypto. And I'm just curious how many people's portfolios went from $500 to $1,800 in this time frame. I know some people have made a shit ton of money. I know some people have made a couple X's on their portfolio, but you think the general bag holder right now is up over a 3X? I don't think so. I don't think so. We almost, if you look today, we were $10 or yeah, we were like $15, $20 away from hitting 2,000, which would be a 4X. How crazy is that? How crazy is a nice solid 4X on the portfolio? And then obviously it decimated, got wrecked here. I still feel the same about HBAR. I do feel the same about HBAR for the most part. We find. For the most part, I do. I think it'll do well. I have toned back how excited I am for it. That and Quant. HBAR and Quant, I've kind of toned back how excited I am for them because they're just not performing to the same capacity that I wish they would have. I still think it'll do really well, and I think we'll approach all-time highs, potentially putting in new ones because of that board of directors for HBAR. But I think if you look at that, if we just go back to all-time highs, that's about a 5X from here. I think there's significantly more opportunity in DeSci, so I'm trimming that and Sauce. I still am bullish on them. A 5X is not bad in the slightest. I just want more. Give me more. What's good, Ducks? What's good? What were we gonna do? Oh yeah, we're gonna scroll through and look at some liquidity. Look at what's good. So pretty much everything's gonna have the exact same pattern here, but we're gonna see and if we can find something that's stronger or weaker. So HBAR, speaking of HBAR, it came back up to the VWAP, so it's looking a little bit stronger. XRP is not bleeding. Notice how all the others, notice how every single thing so far has had a downward slanting line here. After we've rebounded, it's kind of come up and then been going down. XRP did not. So if there is one that's going to come back up to the VWAP, my money would be on XRP here. We got 3.5% returns. See, again, Aptos coming down. Arbitrum coming down. Arbitrum did come back up to the VWAP though, so that's a quick little scoop. If anyone had any open orders on those, you made some good money there. CSPR. CSPR is going crazy. OGN, I forget why this is on here. AVAX and then Link. Another one that's holding up really good today is ICP. ICP is doing some good work here today. Like it's still up on the day, I believe, or I guess now it's like just about break even, but it was up on the day, which was quite a feat considering Bitcoin crashed 15%. It's because ICP was up 17%, you know? Filecoin, I made a video on ResearchCoin when it was at 3 cents. God damn. Good shit, Vester Lund. Joking? Good shit. That's a good call out, dude. Filecoin, Phil. F-I-L. It's definitely looking a lot weaker. One thing that's going to help us out here, okay, because everything's going to follow the direction of Bitcoin right now. If Bitcoin chops, if Bitcoin can chop around range bound, it's possible that other altcoins will start branching off in their own direction. But I don't think Bitcoin's going to be range bound right here. I think it's going to make some solid moves. I also want to say it's very interesting to see how Bitcoin wicked below the support line we had drawn and then came straight back up found a little area of congestion, and then came up to this minor support line that we had drawn earlier. It's just interesting to see exactly what happens to each time Bitcoin has these volatility moments. They go immediately just down to where we have these support and resistance lines. Couldn't agree more. I don't see a consolidation. Exactly, Dux. Dux gets it. Dux gets it. But let's look at the liquidity chart, which we look at almost every single day. All right. Now, I know that some of you guys are probably new here. Let's see how many people are chilling with us. We got 8 concurrent, 7 likes. Shout out all of you guys. So this is a liquidity map. All right. I see some new names, so we'll go over it briefly. It was just internet points then. I've only vested time into research, never fiat. Hey, honestly though, that's even better. You put your time into doing some of the sourcing on their website and you get rewarded for clearing out those bounties. I'm going to be honest with you, man. That's probably the best trade you could have done. So as far as the heat map goes for Bitcoin's liquidity, most of the liquidity right now is way up higher than Bitcoin's current price. And that makes a lot of sense because we just flash crashed straight through that. So it didn't have time to really fill all those liquidities, all of those open orders, right? We know that price tends to trend towards the liquidity, so these open orders. However, right now is a little bit peculiar because despite literally no liquidity below us, it's still looking fairly weak on the charts. You can see it's like more and more, as Bitcoin goes down, the size of these bubbles are getting larger, meaning more and more volume is taking place at those spots. It's also interesting to see that over here on the left side, that flash crash we had went straight down to grab the liquidity right at 41,000. So it immediately just went down, grabbed that liquidity, and then came back up. And it's kind of finding out where it wants to go. So according to the liquidity, I say we're still headed closer to that $46,000 area. However, I'm a little bit uneasy on actually making any trades with that, given how much momentum we just had to the downside, right? So we know now, though, that liquidity is above. However, Bitcoin just continues to bleed and bleed and bleed. So yeah, it looks like we're probably going to come straight back down. I imagine we're coming down to probably just down to this support line again, to be honest. Not that much, 0.3. I wouldn't be shocked if we came back down to 41,600. Eight views, 8 likes, nice percentage. That is a nice percentage. Reading that out loud kind of made me sad though. I've had live streams over on TikTok that get like concurrent, like 200, 250 people. And then like the entire live stream will have like 10,000 people who have come through the live stream. It's just the exposure on YouTube is so different. So different. I think the most likes I ever had on a TikTok live stream was like 53,000. But that's different because you can tap it a bunch of times. You know? I need to get the answer there, Dux, is that it's so time consuming to go live. And people will do it where they live stream on YouTube and then have their TikTok phone like right here to live stream them while they're on YouTube. It doesn't get good conversion. It just doesn't. Nobody on TikTok wants to watch you stare at a screen and not be able to see the screen. So they want to be involved in whatever it is. You need to get their attention even more so than on YouTube. And so you have to have dedicated time towards the TikTok live streams, and they take up so much time that it's just like, ugh. I'm in the middle of building a bunch of stuff out, and I should. I'm making excuses right now. There's really no reason for me not to be doing it, but I have not been doing it, which sucks because I spent literally all of last year going live every single day over on YouTube or on TikTok. Then I switched it over to YouTube, but I did a bad job at expressing that to everyone. I just kind of did it. It is what it is, man. It is what it is. All right. Now, I'm going to talk about a reason for everything to go in the gutter. All right. I'm going to talk about a reason for why things are going to crash. Look at how beautiful this guy is. And go to my profile, over on X. And we'll go look at the tweet that I made yesterday. Literally just yesterday. I said, a bad crash is coming. I'm net long 88% on this market and have been since November of 2022. Not a lot of people, truthfully, a little side tangent here. Most people were not long on the market November of 2022. Most people were super bearish, saying we're going down to 12K, 10K, 8K Bitcoin. Most people were saying that. I was not one of those people because I felt like that was just you were blindly throwing out numbers without having any justification for those numbers. Yes, everything can continue to go further. And if I'm going to be completely honest with you guys, I had turned bullish back in like September, October. So I missed, I got kind of screwed from one final capitulation moment, but that realistically wasn't that bad, right? Looking back, does it matter if you bought, no, where's the drawing? Looking back, does it matter if you bought here and here and here and here, right? No, it doesn't. Everyone's happy who was buying back there. The only time that you were sad was immediately after, and that just is part of the game, right? But that's a little side tangent there. A little side tangent. I'm saying the bullish narrative is very clear right now. And for 2024, the idea is that it will be the year of the ETF. There's a halving. It's the election year. There's going to be rate cuts. And it's going to be up only for the entire year. That's kind of the narrative right now. But I think it's important that we not ignore what's actually happening in the economy, right? Now, everything takes a very long time to play out. Everything takes a very long time to play out. But we still can't just turn a blind eye to things because prices are going up and everyone's excited. Let's not forget that 2008 wasn't an election year, right? So election year is very much irrelevant when it comes to that. Generally speaking, about 70% of the time, Cramer killed it. Cramer, I was thinking that, like, Cramer has been just flip-flopping constantly on Bitcoin, and it's kind of silly. It's like a sign of a weak mentality, in my opinion. But 2008 was an election year, so really the election year next year means nothing. 70% of the time the market goes up during an election year, the stock market, but it doesn't mean it has to go up, right? It does not mean it has to go up. And if you think it's gone up every year since 2008, so it's probably about time that an election year is not a bullish year. But regardless, we go look in the next thing. Unemployment is rising. The yield curve is inverted and jobs are getting cut, right? The economy is not in the greatest of situations right now. Yes, it's an ETF year, but what happens if it gets denied? What happens if they push it back, it goes to court, everything fails? I think the ETF will be coming out. I don't think it's a question of like if this happens, it's just a matter of like when it's going to happen. But it's never as easy as just up only the entire time. Rate cuts only cut because something is breaking. Now, what do I mean by this? Let's look at some data. I can say whatever I want, but let's actually address some data out there. I'm probably not gonna, I'm net bearish on Bitcoin right now for the time being, for the day. So look for some trade setups as we approach back down to the $41,650 area. If you're planning on trading, I'm not going to be trading today because I'm going to go over all this stuff. But look for some bearish trade setups, IMO. The first thing up that I want to address with everyone, and we'll circle back to this after I prove my other points, but cutting rates is bearish. Immediately after you cut rates, you tend to go into a recession. You have to think, why would the Federal Reserve be cutting rates? They don't just cut rates because everything is working amazingly and everyone's making money and things are perfect. No, they cut rates because they overshot the tightening. They cut rates because they need to provide some liquidity and some ease of the market. Rate cuts are a tool to kind of soften a recession. You can go look at every single time they cut rates. Back in 2020, they immediately cut rates to zero on a Sunday. We immediately had a recession. Very short-lived recession. That's because they just started printing money like no one could ever even imagined. 2008, they cut rates. immediately went into a recession. The dot-com bubble, they cut rates, immediately went into a recession. Not immediately, but like it's about 6 months after they cut rates, you go into a recession. They cut rates back here in September of 1998. They went from 5.5 down to 4.7, so a little bit less than one percentage point. And same thing back here. In 1995, they went from 6.05% rates down to 5.24. So again, a little bit less than 1% rate cut, and there was no recession. So they did an appropriate rate cut without the recession. So these are 2 times, right? We go back to here again. In June of 89, they started cutting rates, and then we went into a recession shortly after. This one was a little bit longer. This was about 18 months, but they had aggressive rate cuts right there. Back in here too. Pretty much every time they're cutting rates aggressively through a rate cut cycle, right? I kind of view this whole thing as one cycle. That's a rise, but then another cycle downwards, right? So there are cases where they're cutting rates and it doesn't immediately lead to a recession, but I would say about 85% of the time when they cut rates, we go into a recession. At least in modern history, at least over the last 70 something years. 38K, imagine it just wicked immediately down to 38K while I'm talking. Now that we've addressed that, now that we understand that, when are rate cuts coming? Well, we can go look at Fed futures, which everyone conveniently seems to forget whenever we have rate cut or rate hike decisions. Everyone's always like, what's going to happen? Are we going to raise rates or are we going to lower rates? Is this going to be the time that the Fed pauses? It's like, shut the fuck up. You can literally go look at what they're going to do. They never go against this. They don't. They just don't, because it's not good. We have a trust-based economy. If they go against the trust, then they ruin everything. So stop fucking acting like a dumbass and just come look at the actual tools that they provide for us, all right? I'm sorry I'm swearing this early in the morning, all right? It's just annoying sometimes. But if we come look at the rate cuts, by the end of 2024, so December of 2024, there's a nice convenient bell curve here with the consensus, the absolute midpoint, assuming that we'll be at 3.75 to 4 for rates. Currently speaking, we're at 5.25 to 5.5. So they're expecting about a 1.5% rate cut on average. We could see anywhere down to a 1.75% rate cut or just a 1.25% rate cut. But regardless, it's more than 1% is being priced into the market right now. We come back to here. When they cut rates, recession. Another indicator that we can look at is the yield curve. The US yield curve, all right? Here's a historical chart of the US yield curve. The yield curve being the yield between a 2-year and a 10-year. How do you really feel? I know, I got caught up there for a second. Let me take a little sip of coffee. I just hate going on Twitter like the day of a rate cut decision or a rate hike decision, the day that the Fed is talking and everyone's debating back and forth. It's like there is no debate right now. Go debate about something that's actually useful. Stop debating about things that are just showing your ignorance. Yield curve. Every single time the yield curve inverts, it's highlighted red here. All right, or no, sorry. The recessions are highlighted red here. The yield curve inverting is signified by us going negative on this basis points. The yield curve is a representation of the 2-year and the 10-year. So if you compare the yield on the 2-year to the yield on the 10-year, if the 2-year is yielding more than the 10-year, something is wrong, right? If locking up your money for a short period of time gives you higher yields than locking up your money for a long period of time, that's not normal. Usually if you put something away for a longer period of time, you should get more money. That's just how a healthy economy works. When the yield curve is inverted like this, right? And it doesn't look like, let's go back to like 20, well, we don't even need to go that far, but I guess 2012. This is what a normal yield curve looks like. All right. This is what our yield curve looks like, inverted. Whenever it does that, shortly after it uninverts, about 6 months to a year after it uninverts, we get a recession. And this is about 95% accurate, 95, 99% accurate. There's only been one time, I think right here, in which we inverted, uninverted, and did not get a recession for a few years. Even during COVID, somehow it knew Somehow the yield curve knew there was going to be a global pandemic. We inverted for a little blip on the radar and then uninverted, and we had a recession. We've been inverted for like a year and a half now. We've been inverted for a very, very long time. So maybe this time's different. Maybe this time's different. But historically, it has not been. And I think people have just gotten used to it. We go look at when it inverted. It inverted back here in 6/26 to 2022. So back in 2022, I don't know if you guys remember that. I know we're in 2024 now. But back in June of 2022, we inverted for the first time. And we've been inverted the entire time since then. That's crazy that that was so long ago. The uninversion is usually not a good thing. That's usually because of rate cuts. Not usually, that is explicitly because of rate cuts. If you go look, they highlighted this area where interest rates are currently sitting. Interest rates coming down is the Federal Reserve controlling the short end of the yield curve, snapping it down to shorten interest rates because something broke. They don't do that just for funsies, they do it when something broke. Let's go continue to, these are all like, cool, these are little indicators that we can look at and patterns and charts and all these fun little things. Let's go look at some actual economic data here. How about we take a moment to address job openings? Job openings have been dwindling like crazy since, again, about the yield curve inversion, the beginning of February, or March of 2022, we had the most amount of open jobs. Now jobs have been coming down consistently for the last year and a half. For almost 2 years now, job openings have just been slowly dwindling down, showing a tightening of the labor market. Things are getting tighter. Yes, most of it came from excess, right? It's just kind of a reversion to the median, because if you go look back through this expansion of the economy from 2010 to 2020, we were much lower job openings, much lower job openings. So maybe that's good. Maybe that's a null point, but nonetheless, jobs are shortening. You come look at the unemployment rate. The unemployment rate, again, every time the unemployment rate goes up, we lead to a recession. If you look, I'm no chart expert, but that does look like we're kind of having a little bit of a reversion of the unemployment rate. We are bottoming out and beginning to go back up for unemployment. If you want a little fun factoid here, there's never been a point in American history in which the unemployment rate rose by 0.6% and we did not get a recession. There has never been a point in history where the unemployment rate rose by 0.6% and we did not get a recession. Where did we bottom out here? Okay, this is not going to express to me appropriately. I don't think we've hit the 0.6% yet. I think it was like 0.4 or 0.5, right? But we are starting to curve back up. I know it just looks like it's flatlining here, but for pretty much all of 2023, it's been flatlining. And then if you kind of zoom out a little bit, you can see that we are starting to creep back up slowly. Yeah, it could be something like this, but we're at the lowest unemployment rate that we've had in pretty much modern history. The last time we had it was back in the 70s, and then before that it was in the late 50s. I turned my farts into a giant turd. I'm happy for you, Dirk. I imagine you guys are getting pretty bored of this, but I wanted to address it with everyone because it's very important that we don't just get suckered into the euphoria that you see on crypto Twitter. There's a lot of stupid people on crypto Twitter who are just constantly tweeting about meme coins and just like, oh, we're up only, everything is great, there's no way that crypto could ever get turned down. And you notice that they just came out of nowhere when things started going up again. So it's just a lot of people who truthfully have no idea how an economy works, have no idea how market structures work, probably are going to sit here and try and tell me that, never mind, I'll keep that thought to myself. But there's, yeah, see, thank you, Ben. Put 100K into Bitcoin and it's guaranteed to double in 12 months. Nothing could go wrong. My unemployed brother-in-law. This embodies it exactly what I'm trying to say. Nothing could go wrong. Client just sent me the screenshot from their unemployed brother-in-law. Like, come on. Come on. Let's remain level-headed and remember where we're at. That's my whole point there. Let's see the damage we did to the numbers of people watching. Oh, it went up. That's crazy. That's crazy. You guys enjoyed that. I was fully expecting to come back to like 3 people chilling. Most people in crypto space are just gamblers. Yeah, exactly. Most people are just gamblers when they're here. And it's important that I think you even recognize that like gambling is very similar to investing, similarly to a square and a rectangle, right? We know that a square is a rectangle, but a rectangle is not a square. Investing is gambling, but gambling is not investing. When you go to the slot machine and you pull that lever, you are not investing, you are gambling. But when you speculate on the appreciation of an asset and you wager money on that fact, that is technically gambling. You can do it in an educated fashion. Like if I go buy S&P 500, right? Odds are it's going to be great and I'll make some money. Odds are I'm going to make some money putting it into the S&P 500. But I'm still wagering money on a specific outcome. That outcome is that the US economy grows. I'm still gambling. It's just I'm educated when doing it. Most people conflate the idea that all of crypto, all of investing is just gambling. Therefore, X. Therefore, I can just throw money at meme coins and make money, right? That's not how it works. That's just genuinely not how it works. Otherwise, you're going to get absolutely wrecked. You're going to absolutely decimate your portfolio just because you don't actually know what's going on. There's no reason for Pepe to be trading at this price other than the fact that it just is, right? I can justify a reason for why VitaDAO is trading at this price. Well, this is a very illiquid looking chart, but I can justify and provide a reason for why VitaDAO is trading at its current price. That's what sets us apart. If you're here and you enjoy this type of information, hit that like button and make sure you subscribe. Join the Discord if you are one of those investors. But that's what sets those investors apart. And I don't want any of you to forget that. I've had to debate it. I've had to argue it excessively in the last couple weeks, in the last couple months. And it's like goofy. It's very, very goofy that I have to spend any amount of time explaining to people that gambling on a meme coin is not the same as investing into Bitcoin. It blows my mind, but there are some dummies out there. Got out at 44 with $3,300 in profit. Let's go, Dirk. There's no way the ETF will be what everyone thinks. Now, I think over the long term, okay, here, we'll bring it to a final conclusion with all of these thoughts, all right? Over the long term, meaning like 2 years, 3 years, I think that us having an inverted yield curve won't mean anything. I think that them doing rate cuts won't mean anything. I think us going into a little bit of an unemployment shock won't really mean that much in the economy because they have shown us with a modern monetary theory, MMT, that they will print as much money as necessary to get us out of that problem. They have no qualms with the value of the dollar. They do not care about that. And even still, like explaining monetary theory to you just briefly, I'll do it a very quick synopsis, but global trade is denoted in dollars. Oil trade, for the most part, up until like last year, has been exclusively traded in US dollars. So if the US prints a bunch of dollars, other countries come buy up those dollars as quickly as they can and kind of absorb it into the global economy. So the US can print as much money as they want, theoretically, according to modern monetary theory, because the rest of the globe will just soak up all that liquidity and make it so that they didn't really devalue the dollar all that much. That is low-key changing, but that is the reason why they don't care about how much they print, and they will just print an unlimited amount of money to make sure that this unemployment rate does not actually spike all the way back up, right? Every single time. This is the only solution that they have right now. That's actually why they were raising interest rates. I know they were raising interest rates to fight inflation, yes, but they also were raising interest rates so that when something broke, they could lower interest rates again, right? And so with that, what happens, what soaks up a lot of extra liquidity in the market when they print an excessive amount of money? Well, that's Bitcoin. I wish I could overlay Bitcoin over interest rates or over the M2 money supply, but you'll notice that like every single time interest rates are low for an extended period of time and they're printing money, Bitcoin goes up. It just kind of absorbs all that extra liquidity because people look for somewhere to place all their cash. Leave the frogs alone. It's funny I started degen and turned blue chip holder. The journey has been fun. Hey, I will, you know what? No, I won't leave the frogs alone. God damn it. You can make money on it, and I hope everyone does. Yeah. Am I going off the rails with you guys? Does what I'm saying make sense? Resonate with anyone? Let me go ahead and start a Q&A, start a poll. Oh, I didn't know you could do that. No. We'll go scoop. Let's start a poll. Yes or no? Did I do a good job explaining my idea there? Does it make sense to everyone? The problem is that I have no idea how long this is going to take, right? If we go look at inflation, here, I don't need max. Back here, I actually called the top perfectly over on Instagram when my main focus was on Instagram. It was actually like hysterical because we got that 9.1% inflation reading, and I posted a video that day saying that it was over, saying that that was the peak because all commodities were starting to come back down. But I was very much convinced that in the next like 6 months, they would all be done. It would just be straight down. So most of the time, like very seldom am I inaccurate or incorrect. It's just often I underestimate how long these things might take. And so I'm coming out saying, hey, we're going to have a pretty nasty crash, right? When the yield curve uninverts, when they start cutting interest rates, all that stuff. You can actually, well, we'll circle back to the interest rate comment there in a second. Don't allow me to forget the interest rate comment. I want to line it up with Bitcoin, but it's very possible that like I'm thinking 6 months from now, we might get a nasty crash. My gut is saying that sometime in like February or March, we're going to get a nasty crash, but maybe it doesn't happen like that. Maybe it takes 6 months. Maybe it doesn't happen in 2024. It happens in 2025 and we get an entire cycle. We get an entire cycle like this because of the ETF, and then we come crashing down because we go into a recession. You know, maybe that's something that happens. And then we do see Bitcoin at 145,000 and then we get the major recession. I don't know. I don't have a crystal ball, and I'm not pretending to have a crystal ball. I just do know that this is not a healthy economy. And there's no chance that Bitcoin just goes up forever in an unhealthy economy. I'm in the sauna listening to bros spitting bars. Let's go, Fritz. Let's go, German Fritz. Oh, yes. Okay. Fed rate cut decisions. Let's go here. And I'm going to zoom in a little bit, okay? I want to show you guys something interesting. In July of 2019, they began the rate cuts. Last cycle. Last rate cut and rate hike cycle on July of 2019, they cut rates. If we go to Bitcoin, let's go to a cleaner graph. I don't think I've drawn anything on this one. If we go to July of 2019, so it's probably better if we go to a monthly chart. What is happening? What is going on? There we go. You will see that was exactly where we peaked, had a local top. We had a local top 1 month before that because markets like to price things in beforehand. So if you go look, last rate cut, rate hike and rate cut cycle, when they started cutting rates, Bitcoin then proceeded to go down for 274 days and fell about 72%. We are very much expecting a rate cut to happen either in January, I guess it'd be early February, The market right now is kind of expecting that there's not going to be a rate cut in the next 4 weeks, right? But then come the March meeting, they're expecting that we will have one rate cut. So we'll begin that rate cut journey at the end of March, right? So we come look at Bitcoin's price chart. The market is expecting that in March, we cut rates. If it were to line up with the last cycle, that means the following month would have a local top around the same time as the halving, which is kind of interesting. Just saying, pretty interesting. But what else? What else? When did Bitcoin bottom compared to the rates? In April of 2020, we were done with rate cuts. And let's go see what Bitcoin did in April of 2020. Oh, that's interesting. That coincides perfectly with the bottom. 1 month, Bitcoin bottomed 1 month before rate cuts bottomed. And Bitcoin topped out 1 month before rate cuts started. Kind of intriguing, isn't it? Let me get my coffee and turn into a frog real quick. Do you know why they put the pinky out? When you're being fancy and you're sipping something from a mug, you put the pinky out because back in the day, there would be a lot of condensation on your drinks. And so if you removed the pinky and preferably your thumb, then when you would go to season your food, you could grab in the communal dish of seasoning and then sprinkle it on top of your food, and it wouldn't stick to your fingers because of the condensation. Pretty interesting, right? So if you're being fancy drinking, you're just ideally using these 3 fingers. That way you can go pinch the salt and sprinkle it on your food. The more you know. Am I acoustic? Generational programming. Oh god, bro, someone straight up stole the thermometer in the sauna. Yo, that's sketchy. That's sketchy. Somebody needed it at home. Maybe they had a home thermostat that they needed it for. And this is not to say that Bitcoin cannot go up during rate hiking cycles, right? Bitcoin can go up so long as the economy can soak up the impact of rate hikes. So where did Bitcoin top out at? Look at Bitcoin was running the entire time here from December of 2018. Bitcoin had bottomed last cycle and then was running up. And if you go look at December of 2018, Bitcoin was going up while rates were still going up. In my opinion, that is Bitcoin trying to front run it. That's Bitcoin front running the cut, because the cut going to 0 rates is bullish. Being down at a very, very easy money is very bullish for Bitcoin. It's just the process of getting there involves pain. The process of getting to 0 rates involves pain. The process of getting to a stabilized rate causes pain in the market because no one's used to it. We don't know what's going to survive in that environment, all that fun stuff. So they just need stability, really, is what I'm saying. They don't like the movement of rates. Just like rate hikes here caused Bitcoin to plummet, and then we've kind of been just chilling at the current rates for several months at this point, and Bitcoin's been exploding. Imagine. All right, we got 86% of people said that yes, it made sense. What is that one person? If the one person who said no has any questions, feel free to ask. I would love, maybe I'm missing something. Maybe I just need better language to explain my thoughts here. Basically, I'm a permabull, and it's really hard not to be bullish on investments that I like. But I think we have to be aware of the issues that might face us in the not so distant future. I don't know when those issues will come in, And that's kind of why I like options in the stock market, is because I can hedge everything. If I got this weird feeling in my tummy that we were going to crash, I could go buy a bunch of puts that expire in 8 months. And then if we do crash, I made money, you know? Or if I feel like things are getting a little bit overzealous in the markets, I could go sell some calls. And then somebody would pay me to buy my investments at a certain price that I wanted them to buy them at. And I wish that crypto had that more liquid. I know some places offer it, like up downs over on crypto.com, but it's not the same. It's actually not the same at all. Sadness. But yeah, I'm probably going to buy some more Vita during this crash. I low-key should do it right now. We're at $3.13. I got $283 in cash. I don't know. I won't do it right now. You guys got any questions? Got any coins we want to break down? Got any portfolios that we should look through? This was pretty much my whole spiel. I wanted to go over why the Federal Reserve cuts rates. They only cut rates when we're about to enter into questionable economic times, when they need to make sure that the economy softens a little bit. The economy is in fact softening quite a bit. Jobs are down, unemployment is starting to curl back up. Cutting rates causes the yield curve to uninvert, and historically uninverting the yield curve has been super bearish for the entire economy. It's a recession. It's a sign of a recession. When recessions come, they print unlimited amounts of money to get us out of those recessions, but not before prices of assets plummet. So just keep that in mind and be cautious. If you got balls of steel, you can buy. If you get kind of nervous and you know that you're going to paper hand and you're up a lot of money right now, go ahead and take some profits. I took a good amount of profits on ICP. I held a lot in my personal portfolio because I did that grant. They paid me and I kept it all in ICP. You guys actually want to hear a cool trade here? ICP paid me, I did that grant program towards the fall time last year. So ICP paid me right here at about $4 for the bag that I'd gotten. And then I held on to it. And I looked like an idiot at first when it collapsed a little bit more, because I was like, oh, damn, that was goofy. But then when we started rallying, I just sold off like half of it at like $12. And I still believe in ICP. That's not to say I don't believe in ICP. I just, like, that's my income. You know, I gambled my income. And it ended up playing off nicely. But I took my profits and I just went and bought a new phone. Because I have been using an iPhone 11 for the entire time I've been making content. And it's about time that I upgraded it. So we got the 14 Pro Max, which should be coming on Tuesday next week. And that's just to say, to make sure that you're taking profits. If you have a lot of money in something and it went up a lot, make sure you take profits. I know, what's his name here? Where is that comment? Who said they bought Research Coin? Vesterlund, I think. Yeah, Vesterlund. You were in Research Coin when it started doing literally 100x. If you guys put money into Research Coin when I first started talking about it, literally started talking about it like right before this pump, right? If you got in and then it did something close to 100x, it did literally a 40x and it's still sitting up like 20 or 30x. If you put anything substantial into it, nobody's going to get mad at you if you take a little bit of money off the table. Nobody's going to get mad. Just like I've been doing with every single one of my plays in the portfolio challenge, when it gets to a certain price point and things start to calm down a little bit, I take my initial bag off the table. Like, it's very simple, guys. Very, very simple. Just make sure that you're doing it, because you can't use any of this until you turn it to cash. Your time is your most valuable asset. Hopefully, this live stream was worth investing it into. We're at 13 likes, 8 viewers. Let's go. I appreciate all you guys. And I will see you guys in the next video. We have a class today in the Discord. I know I just waited till the very end to say it, but we're hosting a class today. I'm going to go make the event literally right now. I'll see you guys there.